Yeah, that led to a disappointment as well, but margins too were on the weaker side. So the only saving grace was the fact that the LFL growth is actually turning positive, and it's after many quarters that we have seen that. And more importantly, as you heard, the commentary going forward is important, and I think that will what the stock will incrementally react to today, that at least the management is pointing to a bit of a growth. Having said that, in terms of the commentary coming in from the brokerages, it's a bit mixed. They are talking about how Q4 has missed expectations on weak margin. Morgan Stanley, for instance, says that improved underlying demand remains key to recovery. LFL has turned positive on a weak base, but dine-in continues to decline, and that's something that they want to see a turnaround in. Having said that, the management does believe that for Domino's, they have gained market share, and going forward as well, the investment mode that they have been in will bear fruit. Jefferies too has actually cut the target price to 475, like the stabilization in the LFL, but they said that growth focus was visible on the call, with the management taking efforts to make sure that there's growth, even if it is coming at the cost of margins. So I think all of that will be taken into account today. The stock has been underperforming, and then of course you have that Eurasia consolidation which will happen. I think it will start happening from this quarter around, and Street will wait by and see how that really pans out.
Okay, what you spoke about is the absolute numbers, but
Sure.
Then you look at relative. What's happening to QSR industry? That industry per se is going through a tough time. So it's not what Jubilant has reported is something uniquely different. Now, are they doing better than the industry? Well, the numbers indicate that they are doing better than the industry. See, for Jubilant Foodworks, commodities are very large cost. Milk prices, cheese prices, if they come under control, and if they come under control after good monsoon, suddenly you may actually see benefits of operating leverage. What is good here is that they're confident about investing in the future. What is bad here is that the space is getting very, very competitive. I mean, there was once upon a time, the only, let's say, food item available to you was pizza in terms of food delivery. Now, because of food delivery apps like Zomato and Swiggy, that entire proposition seems to be changing. And then where is the valuation? It is not like, Jubilant Foodworks has gone way below its historical averages. So what I'm trying to say here is that it's a stock which should be on your radar, and buy it when there is a linear decline in the market, because worst of the contraction is behind us. But even though the business has bottomed out, I think valuation wise the stock has not bottomed out. You buy these stocks when there is a sale in the market. You don't buy these stocks when there is optimism in the market. Just like you wait for the sale to order that extra pizza, I think you wait for the sale in the market to buy the Jubilant food stock.
If you like this video, then like, share and subscribe to ET Now.
Acquiring customers and gaining market share. We'll continue to innovate on the portfolio, sweat our assets, get more customers, serve customers multiple times.
If you like this video, then like, share and subscribe to ET Now.
And the premium end will on the products that we launch will continue across brands. We'll expand occasions and category share through new brands like chicken, coffee and Indo-Chinese food. The annual network guidance for FY 2025.
If you like this video, then like, share and subscribe to ET Now.
Will be 180 stores for Domino's India, 50 for Domino's in Turkey, 20 for Domino's in Bangladesh. In Coffee, we intend to open 70 stores. In Popeyes, our guidance stands at.
If you like this video, then like, share and subscribe to ET Now.
Kitchen.